Have you ever watched a trend explode and thought, I saw that coming? Why didn't I act? Why do you recognize patterns after they've already paid off but miss them when they're forming? Why does hindsight make everything look obvious while the present moment feels uncertain? Here's what nobody tells you. Spotting trends early has nothing to do with prediction. It's about recognizing discomfort. The trends that change lives are the ones that feel wrong to enter, that violate your sense of safety, that make you feel like you're early or crazy or alone. And until you learn to interpret that discomfort as signal instead of warning, you'll keep watching from the sidelines while others capitalize. The question isn't how do I see trends, it's why do I ignore what I already see? Let me be completely direct with you right from the start. You're tired of recognizing trends after they've already run, tired of seeing the moves in retrospect and kicking yourself for not acting when you had the chance. And here's what makes it so painful. You know you're capable of seeing these opportunities. You've proven it by identifying them afterward. You can look back and say, I saw that. I noticed that shift. I had that thought. But something stopped you from acting when it mattered. And every time a major trend develops, you experience this painful sequence that I know you're familiar with. First, there's initial awareness. Something's different here. Something's changing. You notice it. Then comes hesitation. It's too early. It's too risky. It's not clear enough yet. Then dismissal. I'll wait for confirmation. I'll wait until it's more obvious. And then finally, inevitably, regret. I knew it. Why didn't I trust myself? Why didn't I act? This cycle repeats endlessly, and each repetition damages your confidence a little bit more. Each time you recognize a trend too late, it reinforces the belief that you're not good at this, that you're missing something, that other people have some ability or insight that you lack. But that's not what's happening. You're not missing the trends. You're seeing them. You're just not trusting what you see until everyone else validates it. And by that point, the life-changing opportunity has passed. Now everyone teaches trend identification as if it's about technical indicators, pattern recognition, fundamental analysis. They show you moving averages and breakout patterns and support and resistance levels. And all of that has value. But it's backward. Because trends aren't spotted with analytical tools, they're recognized through psychological awareness. The life-changing trends, the ones that actually transform accounts and create wealth, they announce themselves not through chart patterns, but through the emotional state of the crowd, through the psychology of the moment. And if you're not tuned into that, if you're only looking at technical signals, you'll always be late. Here's the reframe that changes everything. Common advice says, wait for confirmation before entering a trend. Wait for the breakout. Wait for momentum. Wait for validation. But confirmation is what transforms early opportunities into late entries. The trends that change lives are spotted before confirmation exists, during the phase when entering feels wrong. And this is the part that's hard to hear. The discomfort you feel when looking at an early trend, that uncomfortable sensation of being too early, of acting before consensus, that's not a warning to stay away. It's often the most reliable signal that you're early enough to profit significantly. So today, you're going to learn the psychological pattern that precedes every major trend. You're going to understand why your discomfort with early positions is actually valuable data, not something to avoid. You're going to discover how to distinguish between genuine early opportunity and false breakouts. You're going to experience the specific mental shift that separates early identifiers from late chasers. And you're going to get practical exercises to train your psychological pattern recognition. But most importantly, you're going to receive emotional permission to act before consensus validates your view. Because that permission, that internal authorization to trust what you see before others see it, that's what you've been missing. When you understand what I'm about to share with you, two things happen. First, you stop beating yourself up for quote-unquote missing trends. You realize you didn't miss them. You saw them. You just didn't trust what you saw. And second, you gain a framework for acting on what you see next time. That constant regret transforms into confident anticipation. You don't spot life-changing trends by looking harder at charts. You spot them by listening differently to yourself and to the crowd around you. When you feel strong resistance to an idea that makes logical sense, when the crowd is emotionally committed to one direction, when the narrative is strongest at the extreme, these are the psychological conditions that birth major trends. Let me tell you a story. A moment in my trading that changed everything for me. Not because I made a huge profit, though I did, but because I finally understood what I'd been missing for years. I was watching a market that had been falling for weeks. And I mean really falling. Every day, lower. Every analyst was bearish. Every comment section I read was full of predictions of further decline. The sentiment was uniformly negative. People were talking about crashes, about how much further it could fall, about how anyone buying was catching a falling knife. And technically, the market looked terrible. Lower highs, lower lows, breaking through support levels that everyone had marked as important. Everything you'd been taught to look for in a downtrend was there. The textbook said, "This trend is continuing. Stay away. Don't try to catch bottoms." But something felt off to me. Not in the market itself. In the commentary. In the emotional tone of what people were saying. The certainty was too strong. People weren't just bearish. They were absolutely convinced. They were mocking anyone who even suggested the possibility of buying. The emotional intensity was extreme. I remembered something a mentor had told me years earlier. The crowd is never more certain than at turning points. When everyone knows what's going to happen, when there's no debate, when the certainty is universal, that's when you should pay attention. Not because the crowd is necessarily wrong in their analysis, but because their certainty means they've already acted on it. Everyone who's going to sell based on that certainty has already sold. So I started buying, small positions, just testing the water. And I want you to understand what this felt like. Every fiber of my being screamed that I was wrong. Every voice in my head said, "You're crazy. Look at the chart. Look at what everyone is saying. You're going to lose money." The market kept falling for 3 more days after I started buying. My positions went red. The bearish commentary got even louder, even more certain. People were posting about how obvious this downtrend was, about how anyone buying deserved to lose money. And I felt like an idiot. I felt like I'd made a terrible mistake. But I kept the positions, not because I was certain about the market. I wasn't. I had no idea if the market would turn. But I was certain about the crowd's psychology. I was certain that this level of emotional conviction, this degree of certainty, this intensity of mockery toward the opposite view, this is what psychological extremes look like. And psychological extremes are where trends are born. 3 days after my last purchase, it turned. Not gradually. Violently. The market reversed hard, and within 2 weeks, it had reversed completely. Within a month, it had become one of the strongest trends of the year. And I was in from the very beginning. Not because I predicted the turn. I didn't predict anything. I recognized the psychological extreme. I recognized that the crowd's certainty had reached a level where there were no more sellers left. Everyone who was going to sell had sold, and that created the conditions for a major move in the opposite direction. That's when I learned the lesson that changed my entire approach to trend identification. Life-changing trends are born at moments of maximum collective certainty, and the discomfort you feel when acting against that certainty isn't a warning. It's confirmation that you're early enough to matter. But how do you know the difference between genuine psychological extremes that signal trend changes and just normal market pessimism or optimism? How do you distinguish between being early and being wrong? That's where the framework comes in. Let me give you another way to think about this. I want you to imagine you're standing on a beach watching the ocean. Most people, when they watch the ocean, they focus on the waves, the obvious movements, the crashes, the foam, the dramatic visible action, and they try to predict which wave will be biggest by watching the waves themselves. But experienced surfers don't watch the waves. They don't focus on what's crashing on the beach. They watch the ocean. They're looking for swells, for subtle changes in the water far from shore that indicate a big set is coming, because by the time a wave is crashing on the beach, it's too late to ride it. The opportunity has passed. The swell looks like nothing when you first see it. Just a slight change in the water's texture way out there. Most people, standing on the beach, don't even notice it. And if you pointed it out to them and said, "Hey, look at that, there's a big wave coming," they'd look at you like you're crazy. They'd say, "That's not a wave? That's nothing? There's no wave there." But the surfer knows that nothing is about to become everything. They paddle out while it still looks like nothing. They position themselves while it still seems too early, while everyone on the beach thinks they're wasting their time. And they're ready when the wave forms. They catch it early. They ride it from the beginning. Trading trends is identical to this. Most traders watch the waves, the obvious price movements, the confirmed trends, the moves everyone can see. They try to predict trends by analyzing trends that already exist. By the time they identify a trend, it's already crashing on the beach. But traders who spot life-changing trends early are watching the ocean. They're looking for subtle changes in psychology, in sentiment, in the emotional texture of the market that indicate something big is forming. And just like the surfer, they have to act when it looks like nothing. When everyone on the beach would say, "What are you doing? There's no wave there, you're too early, you're going to miss it." That's the discomfort. That's the feeling of being early. That's what it feels like to spot a life-changing trend before it becomes obvious. So what exactly are you watching for? What are the signs that a psychological swell is forming? Let me break this down into the specific patterns you need to recognize. First core principle. Trends form at emotional extremes, not technical levels. Everyone's taught to identify trends through technical analysis. Breakouts above resistance. Moving average crosses, higher highs and higher lows for uptrends, lower highs and lower lows for downtrends. And these tools work for identifying trends that already exist. They're great for confirming that a trend is happening, but they're completely useless for spotting trends before they form. Life-changing trends don't form at technical levels. They form at emotional extremes. When the crowd's collective psychology reaches maximum certainty in one direction, the conditions are perfect for a major trend in the opposite direction. And let me explain why this happens, because it's not magic, it's not some mystical force. It's pure supply and demand psychology. Markets move based on the actions of participants. When everyone who's going to sell has already sold, there are no sellers left. When everyone is absolutely certain the market will fall, when they've positioned for that fall, when they've told everyone they know that it's going to fall, there's no more selling pressure to manifest. They're already out. That's when even small buying interest can create massive moves. Not because the buyers are overwhelmingly strong, not because there's huge demand, but because there's no one left to sell to them. The lack of supply creates the trend, so the psychological pattern you're looking for is maximum certainty, not majority opinion. Majority opinion exists all the time. Everyone has an opinion. What you're looking for is maximum certainty. When people aren't just confident, they're absolutely sure. When they're not just bearish or bullish, they're mocking the opposite view. When the emotional commitment is total. How do you identify this? You read comment sections. You listen to what traders are saying in forums, on social media, in chat rooms, in Discord servers. You're not looking for information about the market. You're not trying to get trading ideas from random people on the internet. You're gathering data about psychology. You're measuring emotional intensity. When you see comments like, anyone buying this is an idiot, or this is going to zero, guaranteed or easiest short ever, or if you're not selling here, you deserve to lose money, that's maximum certainty. That's the emotional extreme where trends are born. And here's the counterintuitive truth that your brain will resist. The more certain the crowd is about direction, the more likely a major trend is about to start in the opposite direction. This feels completely wrong. Your brain wants to follow the certain crowd. There's safety in numbers. There's comfort in consensus. But your job is to recognize that certainty as a signal, not as wisdom to follow. Second core principle. Your discomfort is data, not warning. When you look at a potential trend in its early stages, before it's confirmed, before it's obvious, you feel something. Discomfort, uncertainty, fear. The position feels too early, too risky, too contrarian. You feel like you're going against common sense, and most traders interpret this discomfort as a warning sign. They think if this felt right, it would feel safe. Since it feels uncomfortable, I should wait. I should wait for more information. I should wait for confirmation. I should wait until other people agree with me. But here's the truth they're missing. The discomfort is the signal that you're early enough to profit significantly. Let me explain why. Comfortable entries are late entries. By the time a trend feels safe to enter, by the time you feel confident and comfortable about it, everyone else has already entered. The smart money, the early identifiers, they're already in. The easy money has been made. The risk-reward has deteriorated. You're buying from the early people who are now taking profits. Uncomfortable entries are early entries. They feel unsafe because you're acting before consensus, before validation, before the crowd agrees with you. You're alone. And that loneliness, that feeling of being out on your own without support, that's exactly when the best risk-reward exists. So here's the psychological reframe you need to make. Stop interpreting your discomfort as, I shouldn't do this. Start interpreting it as, I'm potentially early enough that this could be significant. Now, I'm not saying all discomfort signals opportunity. Sometimes you're uncomfortable because the analysis is actually wrong. Sometimes you're uncomfortable because you're making a mistake. But the absence of discomfort, the feeling of comfort and safety and consensus, that almost always signals you're late. Here's the practice. Next time you're analyzing a potential trend and you feel that uncomfortable feeling, that sense of, this seems too early, this feels wrong, everyone else thinks the opposite, pause. Don't immediately dismiss the idea because it's uncomfortable. Don't automatically wait for confirmation. Ask yourself this question. Am I uncomfortable because the analysis is wrong, or am I uncomfortable because I'd be acting before the crowd? If it's the first one, if your analysis doesn't make sense, if the logic is flawed, then yes, don't take the trade. But if it's the second one, if the only reason you're uncomfortable is because you'd be early, because you'd be alone, because you'd be contrarian, then that discomfort is valuable data. It means you're in the psychological territory where life-changing trends are spotted. Third core principle. Narrative strength indicates trend exhaustion. This is a pattern most traders completely miss. The stronger and more compelling the narrative supporting a trend, the closer that trend is to ending. Let me walk you through how this works. When a trend first starts, there's no story. It's just price moving. The market is going up or down, and nobody really knows why. There's no explanation. It's confusing. Analysts are scrambling to figure out what's causing it. Most people don't even notice it because there's no narrative to grab onto. As the trend develops, narratives start forming. People create stories to explain the movement. Maybe it's economic data. Maybe it's a policy change. Maybe it's technical factors. The narratives are tentative at first, uncertain, debated. Different people have different explanations, and there's no consensus. But at the trend's peak, at the very end of the major move, the narrative is ironclad. Everyone knows the story. It's repeated everywhere, on CNBC, on Twitter, in research reports, in casual conversations. The story is so compelling, so logical, so well articulated, that questioning it seems foolish. Anyone who doesn't believe the narrative is dismissed as not understanding the market. That's when the trend is about to end. Why does this happen? Because narratives are created to justify positions that already exist. People don't create narratives and then take positions. They take positions, often for emotional or technical reasons, and then create narratives to justify those positions to themselves and others. When the narrative is strongest, it means everyone who will be convinced by that narrative has already been convinced. They've already bought or sold based on that story. There's no one left for the narrative to persuade. The narrative has done its job. And once there's no one left to convince, there's no one left to push the trend further. So here's the early trend signal you're looking for. Movement without narrative. Price action that doesn't have a clear story yet. Something's happening, but no one can quite articulate why, or the explanations are weak and contradictory, and people are arguing about what's causing it. That confusion, that lack of clear narrative, is what early trends look like. Most traders avoid them because they can't explain the move. They want to understand why before they act. But that unexplainability is precisely what makes them early. Here's how to apply this. When you see a move and your first thought is, I don't understand why this is happening, don't immediately dismiss it. The fact that you can't explain it might mean it's too early for a clear narrative to have formed. That's interesting. That's worth investigating. Conversely, when you see a trend with a beautiful, compelling, universally accepted narrative that everyone is repeating, be very cautious. That trend is probably mature. The life-changing opportunity has likely passed. The people who got in early are now the ones selling you the narrative so they can exit into your demand. Fourth core principle: time perspective determines what you see. Most traders operate on the wrong time frame for spotting life-changing trends. They're focused on days or weeks. They're looking at daily charts, trying to catch daily moves, thinking in terms of short-term fluctuations. But major trends, the ones that actually change lives, they announce themselves over months or longer. And if you're looking at daily movements, trying to identify trends from daily noise, you'll miss the formation phase entirely. By the time a major trend is visible on a daily chart, it's already well developed. Here's the shift you need to make. Zoom out. Look at monthly charts, quarterly data, annual patterns. You're not trying to time entries precisely down to the day or the hour. You're trying to identify macro shifts in psychology and structure. Life-changing trends don't happen overnight. They develop slowly, but they announce themselves early if you're looking at the right time frame. On a monthly chart, you can see the psychological extremes forming. You can see when sentiment has been negative for so long that the conditions are ripe for a reversal. You can see when narratives have been dominant for so long that they're probably exhausted. Here's the practice. Once a week, spend time reviewing monthly charts of major markets. Not to find trade setups, not to draw trend lines or mark support and resistance. You're looking for psychological shifts. Where is sentiment becoming extreme? Where are narratives becoming too certain? Where is confusion highest? These macro observations won't give you precise entry signals. They won't tell you exactly when to click the buy button. But they'll tell you where to focus your attention, where the conditions are right for major trends to develop. And then you can zoom in and look for entry opportunities in those specific markets. Fifth core principle: the confirmation paradox. Everyone wants confirmation before entering a trend. This is drilled into you from the beginning. Wait for the breakout. Wait for momentum. Wait for volume. Wait for validation from price action. Don't jump the gun. Be patient. And in many contexts, this is good advice. You don't want to be reckless. You don't want to jump into every move you see. But here's the paradox. Confirmation transforms opportunity into mediocrity. When a trend is confirmed, when it's broken out, when the momentum is clear, when everyone agrees it's a trend, it's no longer life-changing. The risk-reward has degraded significantly. The easy money has been captured by those who entered before confirmation. You're now getting in at precisely the point where early entrants are considering exits. So here's the uncomfortable truth. To spot life-changing trends, you must act without confirmation. You must enter based on psychological signals, extreme sentiment, weak narratives, uncomfortable feelings, not on technical validation. This doesn't mean being reckless. It doesn't mean ignoring risk management or taking random positions. It means using different confirmation. Instead of confirming with price action, you confirm with psychological extremes. Instead of waiting for the trend to prove itself, you wait for the crowd to prove its maximum certainty. Here's the mental shift. Stop asking, has this trend confirmed? Start asking, are the psychological conditions right for a trend to begin? The first question makes you late every single time. The second question makes you early. And early is where life-changing opportunities exist. Now let me give you some practices you can implement immediately to train this skill. Practice 1. The sentiment survey. Every day, spend 5 minutes, just 5 minutes, reading comments on trading forums or social media about major markets. Pick 3 or 4 markets you follow. Go to where people discuss them. Read what they're saying. You're not looking for trading ideas. You're not trying to get information about where the market is going. You're measuring emotional intensity. You're gathering psychological data. Create a simple scale for yourself, 1 to 10. 1 is confused and uncertain. People aren't sure what's happening. There's debate. There's disagreement. 10 is absolutely certain, mocking opposite views. People are completely convinced of direction, and they're ridiculing anyone who disagrees. When you see a market where sentiment is at 9 or 10, mark it. Make a note. These are potential trend formation zones, not because the crowd is necessarily wrong in their analysis, but because emotional extremes create the conditions for reversals. When everyone is maximally certain, there's no one left to push the trend further in that direction. Practice 2. The discomfort journal. Every time you analyze a potential trade and feel strong discomfort, write it down. Don't take the trade if you're not ready. I'm not telling you to force yourself into uncomfortable positions, but journal it. Note what made you uncomfortable. Was it the timing? Was it the contrarian nature? Was it the lack of confirmation? Was it that everyone else thought the opposite? Be specific about the source of your discomfort. Then review your journal 2 weeks later. How many of the trades you were uncomfortable with actually worked? How many of them turned into significant moves? This builds evidence over time that your discomfort often signals opportunity, not danger. It recalibrates your interpretation of internal signals. You start to recognize that uncomfortable feeling as potentially valuable rather than automatically negative. Practice 3. The narrative watch. Once a week, identify the 3 strongest narratives in markets. The stories everyone agrees on. The explanations that seem obvious and unquestionable. The conventional wisdom that's repeated everywhere. Write them down. Then ask yourself this question for each one. What would the market look like if this narrative is wrong? Not whether it is wrong. You don't know if it's wrong. But what would the market structure look like if it were wrong? This mental exercise prepares you to spot trends that contradict consensus narratives. It loosens your attachment to popular stories. It helps you see possibilities that others can't see because they're too committed to the narrative. Practice 4. The monthly review. At the end of each month, review major market movements that happened during that month. Identify any significant trends that developed. The big moves. The surprising reversals. The trends that most people missed at the beginning. Now go back in time to when they started. Look at what sentiment was. Look at what people were saying. Look at what narratives existed. You can do this by looking at archived comments, at old news articles, at saved charts with notes. You'll almost always find the same pattern. At the beginning of the trend, sentiment was either confused or certain in the opposite direction. The narrative either didn't exist yet or supported the opposite view. The psychological conditions were perfect for a trend to begin, and most people missed it because they were waiting for confirmation. This reinforces the pattern in your mind. This builds the neural pathway that connects psychological extremes with trend formation. Practice 5. The pre-consensus position. Choose one market you follow closely. Just one. Commit to taking one small position per month based purely on psychological extremes, not technical confirmation. The position should feel uncomfortable. The crowd should be certain in the opposite direction. Your analysis should suggest opportunity, but your gut should resist. That's the criteria. If it feels comfortable and everyone agrees with you, it doesn't count. Use small size. This isn't about making money, though you might. This is about training yourself to act before consensus, about building the psychological muscle of early entry, about proving to yourself that you can take a position when it feels wrong and survive the experience. Over time, this practice does something powerful. It desensitizes you to the discomfort of being early. It normalizes the feeling of being contrarian. And it provides real-world evidence that acting before consensus is survivable and often profitable. Let me bring all of this together now and show you the transformation we've walked through. We started with a painful truth. You keep recognizing trends after they've already run, and it damages your confidence every time. You ask yourself, why didn't I see that? Why didn't I act? What's wrong with me? But the answer isn't better technical analysis. You don't need more indicators. You don't need better pattern recognition. What you need is psychological awareness, because life-changing trends don't announce themselves through chart patterns. They announce themselves through emotional extremes in the crowd. I shared 2 stories with you. First, my own experience learning to trade crowd psychology instead of price action. The market that was falling while everyone was certain it would continue falling, and how I learned to recognize that certainty as a signal rather than wisdom. Then the metaphor of the surfer watching for swells instead of waves. How what looks like nothing to most people is everything to those trained to see it. How you have to paddle out when it still seems too early, when everyone on the beach thinks you're wasting your time. Both stories illustrate the same principle. The life-changing opportunities are invisible to most people because they're looking at the wrong things. They're watching confirmed moves. They're waiting for safety. They're seeking consensus. And by the time they get those things, the opportunity is past. Then we broke down 5 core principles that change how you identify trends. Principle 1. Trends form at emotional extremes, not technical levels. Stop looking for breakouts and start looking for maximum certainty in the crowd. When everyone is absolutely sure of direction, when they're mocking the opposite view, that's when trends are born in the opposite direction. Principle 2. Your discomfort is data, not warning. The uncomfortable feeling of being early, of acting before consensus, that's often the most reliable signal you're positioned well. Comfortable entries are late entries. Discomfort means you're potentially early enough to profit significantly. Principle 3. Narrative strength indicates exhaustion. The more compelling and universal the story supporting a trend, the more mature that trend is. Early trends have no clear narrative. Ending trends have ironclad narratives everyone repeats. Principle 4. Time perspective determines what you see. Zoom out to monthly charts to spot the formation phase that's invisible on shorter time frames. Major trends announce themselves slowly if you're looking at the right scale. Principle 5. Confirmation transforms opportunity into mediocrity. To catch life-changing trends, you must act before validation exists. Use psychological confirmation instead of technical confirmation. And I gave you 5 practices to train this skill. The sentiment survey to measure crowd psychology. The discomfort journal to recalibrate your internal signals. The narrative watch to loosen attachment to consensus stories. The monthly review to reinforce the pattern. The pre-consensus position to build the muscle of early entry. Now, I need you to hear this clearly. You don't spot life-changing trends by looking harder at charts. You spot them by listening differently to yourself and the crowd. The discomfort you feel when everyone is certain and you're considering the opposite. That's not fear telling you to stop. That's opportunity knocking before anyone else hears it. The trends that change lives are always spotted in the confusion before clarity, in the doubt before consensus, in the discomfort before safety. You already have this ability. You've proven it by recognizing trends afterward. You can look back and say, I saw that. I noticed that change. Now you just need permission to trust what you see before others validate it. Winners aren't better analysts than you. They don't have access to different information. They don't have superior technical skills. They're better psychologists. They've learned to read collective emotion as data. They've learned to interpret their own discomfort as signal rather than warning. They've learned to act in that uncomfortable space between too early and too late where life-changing opportunities exist. And that's a trainable skill. It's not a gift. It's not something you're born with. It's something you develop through practice and awareness and willingness to trust yourself before the crowd validates you. If this video changed how you think about trend identification, if you realized you've been looking at the wrong signals, if something clicked about why you keep missing trends you actually saw forming, hit the like button on this video and leave a comment. Tell me about one trend you recognized too late, one move you saw developing but didn't act on, and tell me what the crowd sentiment was when it started. I want you to see the pattern in your own experience. I want you to connect the dots between what you've learned today and what you've actually lived through. Subscribe to this channel if you want more content about the psychological dimensions of trading that actually determine success. Because we're going deeper into how your mind works in markets and how to work with your psychology instead of against it. The trends are always there. The opportunities are always forming. The question is whether you're watching the waves or the ocean, whether you're waiting for confirmation or recognizing psychological extremes, whether you're following the crowd or reading the crowd. You have everything you need. You just needed to understand what you were looking for.